Good afternoon, everybody. This is Trey getting back in touch with you from Japan. In today's video, I wanted to do something a little bit different and share a little bit about my first home run in the stock market. I mentioned in a video a little while ago that I've been doing stocks kind of for 15-ish years, but my first real home run I would consider was in 2009 with Ford stock. For those of you who are old enough to remember, we were going through kind of a similar thing at that time to what we're going through now in 2020, except the stock market was melting down. The whole world's economy was slowing down, and what was happening in Detroit basically was that Ford and General Motors and Chrysler, all of America's big automakers, were in big trouble. I didn't have much money. I didn't know anything about investing, actually. I had studied business and run a few businesses, but I wasn't analyzing stocks. I didn't really know how to analyze stocks. And actually, a lot of the resources we have today didn't really exist at that time 11 years ago. And so in the news here and there, you would see headlines. And the big headline that kind of caught my eye was the fact that the government would be bailing out these big three companies, but Ford was the only one that wasn't going to go bankrupt. So GM and Chrysler needed a bailout or else they would go bankrupt. And then hundreds of thousands of people would lose their jobs, and that would probably cause some huge disaster on the American economy in the future. So the government said, okay, we'll bail you out. We'll set up this big program, give you a bunch of money, and then you'll have to pay it back to us over the next few years. We're also gonna buy stock, so we're partial owners of your companies. And meanwhile, Ford was like, we're not gonna go bankrupt, but actually this is super imbalanced and unfair for us because these guys are going to be getting all of this money out of nowhere. How are we supposed to compete with that? So hook us up too, y'all. And so while all the stock market prices were melting down, in January of 2009, Ford's stock price got all the way down to $2.30, something like that. I don't remember what the other companies were at, but I knew I wasn't interested in them. And my only thesis for choosing this was they must be doing better than the other ones because they're not going bankrupt and America's not going to let them go out of business. So that's probably a good investment. So I took all of the little money that I had and invested it in Ford. By August 2009, it was already up in the sevens. So that's almost a 400% gain. And then by June of the next year, it was already up in the 12s. And so I had bought into Ford, not even really thinking about timing, not even really thinking about a long-term big picture investment plan. And I didn't really even have a good grasp of what a market downturn or depression or any of these things meant for me or for individuals. I looked around me and my friends who were doctors and engineers and whatever didn't really seem to be affected. You turn on the news and it's the world's melting down, oh my gosh. But you would look around in LA. I lived in LA at the time and it was dude, nothing's changed. So as a beginner, I didn't know anything about stock analysis. I didn't really understand the concept of downturns or depressions or anything like that. The only appealing thing I saw about Ford was that it wasn't the one going bankrupt out of these three big companies. So I was like, I guess I can buy it at kind of $2 or $3. Maybe it'll go up to $5 or $6. I think I ended up kind of dollar cost averaging out once it passed the $9. So I ended up making at least 300% on my money, which was huge, Up until that point, I'd kind of been yeah, I made 20% on my money by buying a few shares in this company or that company or things like that. And so I share all of this story with you. I mean, 300% in a matter of months. I share all of this with you for a few reasons. Number one is to say that you don't necessarily have to know everything that's going on in the world. It's really easy to get analysis paralysis and say, oh, I don't understand what the Fed is doing with this and that, and I don't understand how this company's technology is impacting different things in this quarter and stuff like that, and GDP and all these things. And I studied business, so I kind of understand those things when I was in college, but I know a lot of people haven't. So all I'm saying is you don't necessarily have to grasp everything to be able to start looking into stocks. And number two, you hear Warren Buffett saying this a lot, be greedy when everybody is scared. So when everybody's fleeing the market, you should be jumping in and buying things for a cheap price. That's actually what I did innately, just kind of by my natural decision making. But it worked out pretty nicely for me. And in the same way, this year, I've made like 50%, 80%, 200% on a bunch of different stocks because I saw in March that huge drop, 30, 40, 50%. And then I was just kind of like, I'm just gonna put a bunch of money in these different stocks, and they've already come back. And so when it comes to depressions or downturns or things like that, it's like a huge opportunity for you. Whether you're putting $100 in the stock market or $100 million in the stock market, you can multiply those numbers really quickly. So I just wanted to share that with you today because it was something that really opened my eyes back in 2009 when I was kind of a noob investor. Hopefully that's good food for thought for you. I want to hear about your first home run. Please feel free to join us in the comments below or join us on our subreddit, which I'll link below as well. And on there, let's connect, let's build a community. One of my goals with this channel is to be able to build a community where we can share about our different stories of growth, moving towards financial freedom. And that will help us to encourage each other, but it'll also help us to get some new ideas for investing strategies and things like that going forward. Thank you so much for your time today, guys. Have a great one.